Practical accounting, the better way to learn.
Oh, we got something cool for you. I want you guys just to take a look at this transaction table. This kind of puts everything in perspective from the transactions all the way through to the financial statements. Check it out.
Okay. Remember, principles, methods, transactions, accounts that are rearranged into financial statements. We just went down through here. We're going back to transactions and how they work. This is something that's literally hot off the press, but it's so cool. It's called the transaction guide. It's in red. All your accounts, major accounts, are listed above here. Assets plus dividends plus expenses on the left, revenue, contributed capital, and liability on the right. So let's say you're going to buy something. Okay, so you're going to get inventory. Okay, inventory. And it's $100 because it's an ad. Always do it with that. Now we're not in balance. See this up here, it just says not okay. And you get a bill, so we're going to record that as an accounts payable for $100 because it's going up, and now we're okay. And wait a minute, why is this not giving me debits and credits? Where did my debits and credits go? Okay, I just fixed it. When you buy inventory, and you can enter these in, just don't anything on this no entry row or you'll ruin. This will give you your debits and credits because we're adding to both sides. There's no impact on the income statement because there's no revenue or expenses, or on retained earnings either because there's no dividends. And it is a credit, which is a source of funding for cash flows. And so we're getting our funding to buy our asset from more liabilities. Let's do one that's a little more fun. Let's do a cash sale. So our cash is going to go up, and revenue coming in here at 100. Okay, we're in balance. 100 equals 100. And now we have net income. This is so cool. Net income appears down here. We have a credit balance in retained earnings. And now we have our source of funding. Our cash is because we collected a sale, a cash sale. So you can do two transactions on this at once. So if we have an expense, which is cost of goods sold for 60, and inventory goes down because we've used it. Now our net income is 100 minus 60 is 40, and that's our balance of retained earnings. What do you think of that, Jim?
That's pretty cool.
You can play around this. It'll help you understand how the practical approach makes things easier for you. Ready to move on?
We're ready to go forward. What's next?
The next is sort of like our appendix. I'm not going to just read it to you. You guys can read it yourself. You'll have this Excel workbook in English. This is a good quick reference. You can get this Excel workbook and a whole lot more
Stuff for free at practicalaccounting.com.
See you there.